Hey everyone, it's Max here, and today I want to talk about May's performance in futures in our flagship algo, grass-fed prime beef. As always, when things are going well, we're transparent, and when things are not going well, we're still going to be transparent. May was a losing month, and there's no sugarcoating that. The master count finished the month down 9.7%. This drawdown occurred prior to a risk adjustment we made on May 13th, which ended up saving us even more downside as we realized conditions were changing and were ultimately not favorable for our main strategy. You hit a difficult stretch like this, you can't just throw your hands up after 2 weeks and say this strategy is not ever going to work again. There's no other way around it. That 2 weeks of data simply is not enough to determine a strategy's viability in the current market. Instead, the disciplined decision we made was to reduce our risk, allowing us to enter more of an assessment period and reevaluate where the market currently stands. Specifically, on May 13th, we made the decision to reduce risk by 50% across grass-fed prime beef. Looking back, that decision did save us from further losses. On the equity side of things, our total stocks returned a net of 2.19% over the month. Tesla was the best performer, and Amazon actually did not even take a trade. In hindsight, that was a great outcome and proves the system is working as intended, because taking trades in choppy markets is just not favorable and is really just a shot in the dark. If you view Amazon's chart, it's been extremely choppy, so the system waiting on the sidelines was exactly the right behavior. Despite May's setback, grass-fed beef is still up 31% year to date, which is something important to keep in perspective. Short-term losses do hurt, but we're playing a long game. One question we often get is, why are the losses bigger than the wins? The answer comes down to simple math and the relationship between risk and reward ratio and the win rate. Generally speaking, if you have a strategy with a high reward and low risk, such as risking $1 to make $2, your win rate is usually lower. In fact, a 1 to 2 risk to reward strategy only needs to win roughly 33% of the time to break even. Grass-fed beef is structured differently. GFB's risk-reward ratio is approximately negative 2.5 to 1. In simple terms, we're risking $2.50 to make 1. That means the strategy needs to win 71% of the time just to break even. Historically, GFB has significantly exceeded that requirement. For most of the year, we've been operating in the 85 to 90% win rate range. That high win rate is what has allowed the strategy to generate strong returns despite having larger losses than wins. In May, we experienced a setback. Our win rate declined, and when a high win rate strategy experiences a rough patch, the impact can be felt more quickly. That doesn't mean that the strategy is broken. It means that it's going through a drawdown period, which every trading system eventually does experience. Our focus remains the same as it always has been. Protect capital, manage risk, make adjustments when necessary, and continue evaluating performance based on long-term results rather than zooming in on a single month. We appreciate everyone's support, patience, and trust. We're going to continue doing what we've always done, which is be transparent, make data-driven decisions, and put our community first. Thank you, everyone, and we will be in touch with you soon.